Hey, you liberal fruitcakes! The stock market and the economy? Let's talk about it! Now, this should be common knowledge, but apparently it's not, because I keep seeing videos posted about this, saying that the stock's dipped! Trump has crashed the economy! Should we tell him? I think we should tell him. The stock market is not a great representation of the U.S. economy. Why? Well, let's look into it. First, let's look at what makes up the stock market. The stock market is made up of publicly traded companies. Though these companies are quite large, they make up a very small percentage of the total number of companies in the United States. The current reporting showing between 3,500 and 4,000 companies within the U.S. stock market. That being said, outside of those companies, the Small Business Association reports roughly 33 million small businesses reported in the United States. And those small businesses make up a substantial portion of the United States GDP. Meaning looking at a small group of companies, though very large, is not an accurate representation of how the U.S. economy is doing. In fact, small businesses produce roughly 44% of the United States GDP. Now, if you math those numbers between that 3,400 to 4,000 and 33 million, these large publicly traded companies make up about 0.1% of the total number of companies in the United States. Now let's look at the percentage of people who actually own stock. Now, data has shown that roughly 58% of Americans have indirectly invested in the stock market, either through 401ks, Roth IRAs, or mutual funds. And when stock takes a dip, of course, these do take a hit, which is unfortunate. And the stock market is risky. That being said, when the stock market dips, it disproportionately affects the wealthy. Why? Because the top 10% own 89% of the U.S. stock market, with the bottom 50% of American income earners owning less than 1% of the stock market. So for more than 50% of Americans, the stock market has really no bearing on their life. Directly. Indirectly, it can, of course, if the stock market doesn't rebound. However, the stock market has taken some big hits over the years, and it always comes back. How fast, we never know. But America is very resilient. Now, there's a couple more things we need to look at the stock market for. Policies. Policies can have a negative effect on the stock market. Whether from what the president says, we saw that dip. Whether a president of a company or a company comes out and makes a statement, it can cause the market to freak out. Whether Congress passes legislation within an industry, that can cause the market to freak out. Or the central bank's policies, which with rate cuts can artificially inflate the stock market. Because the reality is the stock market really likes consistency. And many of you are upset at what Trump is doing, saying that it's affecting the stock market. Yeah, of course it is. Because the very consistency that has been happening throughout the years is eroding the middle class and negatively affecting Americans. And so any sort of change could cause wide swings within the stock market. Heck, nearly any global event within this world could negatively affect businesses, which negatively affect the stock market. Which is why the stock market carries a lot of risk. Another reason the stock market is not a great representation of the U.S. economy is just because stocks are high doesn't mean employment or unemployment are where they need to be. Or if the stock market is low doesn't mean that unemployment is super high. In fact, many of these high-yield stock companies are moving towards automation, creating higher unemployment. Now, it's also important to look at the industry makeup of the stock market, where new and exciting fields that might be very volatile make up a large portion of the stock market at any given time and can negatively swing or impact the stock market because they're disproportionate to other businesses being publicly traded at any given time. Inflation is also something that the stock market doesn't really represent. And just because things might be expensive or cheaper doesn't mean that the stock market is high or low. So when you see the stock market go up or down, it is not a direct representation of how well the economy is doing. It just means there's either certainty or uncertainty in the market. And just a reminder, we are only 75 days into President Trump's second term. And right now there is unpredictability because people want change. People voted for that change. And the stock market is reacting to that. We're only 75 days in. As the stock market is able to gain a larger picture of the economic impact of policies over the next couple of years, the stock market is more likely to stabilize. So deep breaths. You complained about Republicans not giving Democrats time, and now you're doing the exact same thing. Saying, just wait, watch, things will get better. You said it during that time, we're saying it now. Have a good day!